conversation forward with Saurabh Mukherjea of Marcellus Investment Managers. Let's understand what he makes of the current market environment and where is he laying his bets for 2024. Saurabh, I remember watching this very old cartoon long time ago on DD, which used to be called Ulta Pulta. I don't know if you remember that one, right? 2023 has been a year of Ulta Pulta, right? Power has come back, defense has gone higher, quality stocks have gone down, PSU banks have gone up, private banks have gone down. So it's been a year of Ulta Pulta, right?
And the great Jaspal Bhatti was
Yes.
the creator of Ulta, and still what for anybody who's interested in markets, Jaspal Bhatti's YouTube videos are still very relevant. I think it's been a year like that, especially in small caps, where I think, as you're alluding to, hundreds of small caps with no underlying fundamentals have doubled, tripled over the last couple of years. I think, as we all know, the number of demat accounts in India have tripled in the last 2.5 years. And that's the nature of markets, which is why we love working in the market. It creates these roller coaster moments. In 3 years, you create more demat accounts in one of the largest markets in the world that have been created in the preceding 30 years. And in that sort of frenzy, hundreds of small cap stocks fly up. If you ask me, the next 12 months, Nikunj, the next 12 months is largely about foreign investors returning to this market and seeing what they can make of large caps. The sheer amount of money foreign investors make naturally won't go into small caps so much. It'll end up going into the largest stocks. And we're hoping that consistent compounders will continue to make money from that. We're up 26% this fiscal in CCP. We manage roughly $1 billion for our clients. And we're hoping that as FIIs return, that 26% number will be further augmented by FII flows.
Now I'll start picking up themes looking at your portfolios across the board. So I'm picking up themes. One common theme in all your portfolio across market cap category, across classification, is diagnostics. Now this is a business which has again gone through twists and turns, again ulta pulta. Post-COVID it went up. Then once COVID settled down, growth rates really matured, competition increased. Why do you like this space? Because it's a highly competitive market when it comes to the entire diagnostic space.
Yeah, so that nicely put. So I think in the last year and a half, as private equity and venture capital money has pulled back from the space, Nikunj, as PE money has pulled back, we've actually seen a reduction in funding for the smaller path labs. And as a result, the companies that we own, Dr. Lal's in Consistent Compounders and Rising Giants, and Vijaya Diagnostics and Metropolis in Little Gems, they've actually done very well over the last 1.5 years or so, because pricing power is back, competition intensity is dying. And our reading is there'll be massive consolidation in this space. It's a big industry. I would say there's something like $10 billion of revenue on the line in diagnostics. There's only 3 or 4 organized players, the ones that I named, and therefore the consolidation opportunity is huge. Just yesterday, Vijaya Diagnostics announced an acquisition of a small player in Pune. As you know, Vijaya is a South-based player. They're acquiring a Western India-based player. 2 years ago, Dr. Lal's acquired Suburban Diagnostics in Mumbai, the second largest player in Maharashtra. So as this space consolidates, we're hoping that we're backing the right horses here. And, Dr. Lal's, through COVID, made us a lot of money. We went through a rough time in early part of 2022, doubled the investment in summer 22. And again, we're looking good in Dr. Lal's. Vijaya Diagnostics over the last year has been a good investment for us. I think there's plenty of barriers to entry in this space, and competitive intensity, I don't think, will ramp up meaningfully further unless a lot of new money pours into diagnostics again.
Is it a coincidence that you own TCS, Titan and Trent? Is it the Tata, or this call has been taken based on the individual merit?
I think it's on individual merit. Well, there is a common theme, though. There is a common theme as I think about it. I think Chandra's ascension to the chairman role at Tata has made a difference. As I travel around the country, yesterday I went to Boisar to see the market there. What Zudi was doing across the country is absolutely phenomenal. And it's very difficult to believe that these sorts of disruptive moves across the Tata Sons holdings can be happening without the balance sheet backing of TCS, 50,000 crores of cash flow pounding out there every year, and I think Chandra as a chairman has been a change for the better. I think the group has become aggressive, disruptive, creative, and it's just a joy to see Tanishq, Croma, Zudio spread their wings across India.
Just want to take a moment, Saurabh, and mark the 2 listings on your screen. DOM And it's been no surprise to see a pretty stellar listing, a nice 70% premium. Remember, the issue price was at about 790 rupees, given that there had been very strong response as well to the IPO in terms of the subscription numbers, the fact that of the last 3 years as well, when it came to revenue and profitability, there had been a substantial turnaround in terms of their losses to profits, all of that boding well, and which is why you're seeing close to 1386, a 70% plus premium. And not too bad as well for India Shelter, which also listed today. You have a pretty 20% plus premium on that as well. So 2 healthy listings panning out for the day. It's in the affordable housing segment, and you did have pretty strong fundamentals as well and strong participation. So Saurabh, why don't I ask you about, all of the action that we've seen within the primary markets, the slew of listings as well. It's been a plethora of them in this year alone. What have you made of the kind of businesses that we've seen and, just the fact that there has been so much participation?
Yeah, I think it's linked, right? The fact that you're getting these tripling of demat accounts has obviously played a role in rapid inflow of retail investors into IPOs. In parallel, the mutual fund industry has seen strong inflows that's allowed them to put a lot of money into IPOs. And I don't see this abating. I think financialization of savings in India is continuing. My estimate is something like $170 billion every year is now shifting from Indian families' balance sheets into the financial system. And that's powering the primary market. Every week you're getting 3-4 IPOs. And I think that 2024 will bring more of the same. As you'd expect, out of every 100 IPOs, 4 or 5 will go on to become great companies. Our job is to see if we can make a decent fist of choosing those 4 or 5 and leaving the other 95 IPOs to do their own thing.
Saurabh, hi, morning. I'm curious to know about the addition that you've made in the Little Champs portfolio, Tega Industries. Tell us all about it.
Right. So look, I mean, we consistently look for companies who, in commoditized industries, occupy a niche where technology, process, trust becomes a barrier to entry. So in the steel industry, Tega occupies such a space. Just to sort of simplify it, when iron ore is mined, these are huge sort of chunks of stone, as big as this room. To actually process that iron ore and turn it into steel, you need to crush the stone into smaller pellets. For that, you need highly specialized machines. Only 4 companies in the world make these machines at scale. Tega is the 4th largest of them, the only player in Asia who makes this machine. And as the iron ore, as the metals industry, steel industry booms in India, in the recent GDP announcement, you saw steel volumes are 19%. As the steel industry booms in India, we reckon Tega's products will be more used in India. More generally across the world, as the gold industry booms, Tega's products are specifically very useful for the gold mining industry. They have a specific IP around it that's proprietary to them. And it's a very similar sort of GMM formula in that regard. Commoditized industry, gold or steel, but at the entry point of that industry stands a specialized player with proprietary technology. And we think the promoters over the last 40 years have built a very interesting company that we got into 2 months ago after doing around 6 months of research on Tega.
So is this one of those classic compounders, like just 2, 3, 5 year you have a view in terms of earning visibility? What happens to the stock is a function of market and technicals, but in terms of the earnings visibility, do you see this kind of invisibility in Tega?
So it's a good point. So we looked at the industry structure of Nikunj in this industry, right? The industry of Tega belongs to. There's been no new entry in this space for the last 20 years. So I went back as far as I could with my colleagues. We couldn't see any new entrant. And as you'd expect, whether it's the gold cycle or the steel cycle, that goes up and down. But the pricing of the products that Tega makes remain reasonably stable. The demand fluctuates though. So what you get is downside protection when, say, the gold cycle or the steel cycle comes up. You get downside protection and you get upside participation when the cycle booms as it is now. So there is no, in the case of industries like this, you can't sort of get the consistent compounding that you get, say, with an Asian Paints, where profitability grows at 20-25% reasonably steadily. But in a case of Tega, or say, I'll give you another example, Grindwell Norton in our Rising Giants portfolio. These sorts of companies, you get the upside when the capex cycle is switched on, but you don't get hammered on the downside when the global economy softens up. So Grindwell Norton in Rising Giants, Tega, RHI Magnesita in Little Champs is also a very similar stock. RHI Magnesita makes the refractory tiles for steel plants. You get upside participation in steel demand booms, but because it's very difficult to enter RHI Magnesita space, the refractory space, you don't get hammered when the cycle turns down.
Saurabh, I was just having a very interesting conversation with a banker yesterday, and his view was that, look, there was a time when HDFC Bank and Kotak were getting a premium. Why? Because they were the good boys in a bad world of banking where everything, in a sense, was going through a mess. But now NPA is not a problem. Every bank has a clear line of sight for growth and low NPAs for next 2 or 3 years, which means the premium which was commanded by Kotak and HDFC Bank, that automatically gets diluted. Now they are part of the gang, so to speak. Earlier they were the good guys in a very opaque kind of a sector. If that is the positioning of the market and if that is the market view, do you think the premium for HDFC Bank and Kotak Mahindra Bank ain't going to come back soon?
So I think premium is clearly down. I mean, I agree with your banker friend. Over the last couple of years, the gap in price to book or price to earning ratings, that the premium that HDFC and Kotak enjoyed is gone. But will it come back? I guarantee you it will come back. Why will it come back? Just take the whole last 3-4 months of controversy in India about unsecured lending, and certain lenders were ramped up their unsecured lending books without due consideration for asset quality. Some of them have pulled back quite abruptly. Look at SEBI's announcement yesterday evening about certain AIFs being used to evergreen tens of thousands of crores of loans. I'm just quoting SEBI's words: tens of thousands of crores of loans is the headline in a newspaper today. So whether it is naughty lenders using AIFs to do naughty things, or whether it is irresponsible lenders giving 10,000, 20,000 rupees loans, unsecured loans to low-income people without underwriting quality. The nature of finance is that when people get excited, when lenders get excited, they overextend themselves, they do funny things with their balance sheet, and therefore they blow up. And if you take a 10, 20-year view, as we try to do in our consistent compounders portfolio, if you take the long-term view, you stay with high-quality, cautious, prudent lenders who still generate earnings growth of 20-21% pretty consistently. So it's not as if HDFC Bank's Kotak's caution is resulting in muted earnings compounding. Earnings compounding is tremendous, and we've seen this over 20 years. Other lenders wax and wane. A handful of high-quality lenders in India stay the course through the cycle.
What gives you conviction about, the chemical space? And I'm taking a leaf from the addition that you've made in your Giants portfolio, that's Clean Science.
So before I get into the chemical space, one disclaimer, folks: all of these stocks are in our PMS portfolios where I am a client, my parents are clients, 9,000 Indian families and growing list of foreign investors are clients. So onto the chemical space. Clearly, China has been dumping aggressively. May through to October, China cut prices. Chinese producers cut prices of specialty chemicals by roughly 25%, in some cases 80%, some cases 20%, but the average was 25%. Last couple of months, they seem to have stopped. I don't know why the Chinese have stopped dumping in the last couple of months, why there's been an abatement in price cutting, but it has taken place. And what we are doing is using advantage of the pullback in these prices to build positions in, again, niche leaders in the specialty chemical space. Now, Clean Science is a world leader in MEHQ. What is MEHQ? When plastic is made, basically monomers enough to create plastic, but sometimes the plastic producer does not want the monomer to join up, so you need something called an inhibitor, which prevents the plastic from getting created. MEHQ is one of the leading inhibitors in the world, and Clean Science is the world leader in producing this. Innovative firm based out of Pune. It's not just MEHQ. We've seen them do a raft of other very innovative things in specialty chemicals. For example, something called HALS. This is very high-end chemicals. It has never ever been before made in India on a commercial scale. Clean Science has pioneered the production of HALS in India, and we like their science prowess. We've spoken to their clients. The clients rave about them, and hence we took advantage of the spec chem downturn to load up on Clean Science.
Okay. So, Saurabh, just one last point on this FI comeback, and that seems to be a common theme that 2024 there is going to be a flood of flows which will come back, and the bid by foreign flows will take markets higher. My only reservation with that view is that that is becoming like a consensus view that our best friends who've deserted us for last 2 years, they will come back and they will take markets higher. Don't you think markets will start pricing this consensus FI comeback view or the effect of that?
So you're right, Nikunj, it will. It's just that the power of domestic inflows into small caps, the power of retail inflows into small caps have been so powerful, so what should I say, so overwhelming over the last couple of years. The small cap inflows have been so overwhelming that the overvaluation of small caps relative to large caps is at, I think, is an all-time high. So we were looking at charts yesterday, the Nifty 50 versus the bottom 200 stocks in the BSE 500. There is no precedent in Indian history for what we've seen in the last couple of years. Given that anomaly, the discounting has a long way to go, i.e. the repricing of large caps is a long way to go. I agree with you, some of it's happened over the last couple of weeks, but I think this is just the beginning. I think the repricing of large caps and sanity returning to the market, where risk and reward are priced sensibly across the market cap spectrum, I think has a long way to go in 2024.
All right, good to have you on board, Saurabh. Thanks very much for taking us through some of the recent additions in the portfolio as well as the overall market and sector outlook.